Primary financial statements, profit and loss. The P&L or profit and loss account or statement of profit or loss or income statement is one of the key financial statements prepared by a company. It shows the company financial performance. The purpose of a P&L is to show the profit or loss made by an organization over a period of time, typically a year. The P&L shows the income generated and various expenses incurred to generate that profit or loss. It can be useful to think of the P&L as a video of the business journey from one balance sheet date to another. The funnel analogy, commonly used in the context of sales, can be used to represent the P&L. Sales come into a business at the top of the funnel, and the output of the funnel represents the profit retained in the business. Looking at this in more depth, the following diagram takes a cross-section, a funnel, to represent the various expenses or output. As we can see, on the top we get revenue. Revenue is often referred as the top line. It is the income earned during the period. Second, cost of sales. Cost of sales are the direct costs associated with revenue earned in the period. For a retailer, they will be the cost of purchases. For a manufacturer, the cost of production. Gross profit. Gross profit is calculated by deducting cost of sales from revenue. It is used to calculate gross margin, a commonly used performance measure. Operating expenses are the other costs of running a business during a period. For example, marketing, administration, rent, utilities, and other overheads. Operating profit. Operating profit can be seen as the profit from running a business. It is calculated by deducting both cost of sales and operating expenses from revenue. It excludes non-operating income and expenses, if any, such as bank interest received. Non-operating. This is operating profit after adjusting for any non-operating income and/or expenses. This is commonly used performance measure for divisions or large business where both finance and tax are organized and paid centrally. Profit before tax, EBIT, after deducting finance expenses. This total is also often used as a performance measure within large business, depending on how central finance is recharged. Profit after tax. This is EBT, after deducting the tax charge for the period. Retained profit. Dividends.